As a stock market investor, you've probably heard about diversification, which allows you to lower your risk. One way to diversify is through investing in companies that are in different market sectors. This video is all about that. We'll review the 11 different market sectors that exist, analyze their one-year performance, assess their fundamentals by looking at the dividend yield, which would be of interest to dividend investors, as well as return on investment, which would be of interest for growth investors. Here's an overview of the 11 stock market sectors. As you notice, the size of each market varies, with real estate having the lowest market capitalization of just over $1 trillion and the information technology sector having the largest market cap of over $9.18 trillion. The best one-year stock market performance belongs to the information technology sector, with an impressive 29.63% growth, which knocks the performance of the S&P 500 out of the park. The worst performing sector is energy, with a negative 36.94% performance. Alright, so let's go over each market sector in depth by reviewing their fundamentals and providing examples of companies in each market sector. But before we do that, I wanted to ask you for a favor. I've put a lot of effort to research and prepare this video. All I ask in return is to please take a second to like this video. It would really mean a lot to me and would help me to grow the channel. Thank you. Also, please consider subscribing to Moementum channel for more investing videos like this. The first sector to look at is the communication services. Here we have familiar companies such as Spotify, Twitter, and Trivago. Communication services has a market weight of 11.11%. In terms of the price to earnings ratio for this year's estimate, the communication service sits at 32.73. The price to earnings ratio, also known as PE, is the ratio of a company's share price to the company's earnings per share. This ratio is used for valuing companies and to find out whether they are overvalued or undervalued. The next sector is consumer discretionary, with a market weight of 10.54%. Here we have some renowned companies such as Amazon, Norwegian Cruise Line, and MGM Resorts. Here we have a much higher PE ratio, and the estimates for this year is sitting at 65.71. The dividend yield for consumer discretionary sector is currently sitting at 2.63%. Next sector is consumer staples. Here we have companies such as Coca-Cola and Campbell's Soup. The dividend yield is slightly higher than the previous sector at 3.18%. As for return on equity, this sector is doing poorly, sitting at negative 47.59%. Next sector is energy, which has been hit really hard in terms of their performance. Here we have companies such as Chevron and ExxonMobil. Their dividend yield is quite high, sitting at 8.14%, but their price to earnings ratio is not available at this time because overall the sector is not profit making, and as a result there is no actual earnings to be able to calculate the price to earnings ratio accurately. Next sector is financials. Here we have a lower price to earnings ratio, and currently for last year's GAAP actual it was sitting at 10.34, whereas the estimates for this year is much higher, sitting at 89.70. An example of companies in the financial sectors is the Goldman Sachs and pretty much any financial institution or other banks. The dividend yield is at a decent 4.70% for this sector. Moving on, we have healthcare. Here you can mention out companies in the healthcare and pharmaceutical sector such as Biogen, Pfizer, and Merck. The PE ratio for healthcare sector based on last year's GAAP actual is 39.93, and the PE based on this year's estimate would be lower, sitting at 36.38. The dividend yield for this sector is sitting at 2.32%. Industries is the seventh sector that we will review. Here we have different companies such as the United Airlines, Delta, and Caterpillar. The dividend yield for this category is 2.82%. Information technology, with a massive market weight of 26.63% in terms of market cap, with familiar companies such as Facebook, Microsoft, and Adobe. The dividend yield for information technology companies is typically lower, and for this sector is sitting at 1.60%. Looking at the return on equity for information technology sector, it's sitting at 29.71%. Next we have material sector. An example of companies here is the Sherwin-Williams. The dividend yield for this sector is sitting at 3.60%, and the price to earnings ratio for this year's estimate is at 53.50. Real estate is the next sector that we will review. The market weight for real estate sector is at 2.70%. The dividend yield for real estate is quite decent, sitting at 4.68%. Here you have a number of real estate companies, including REIT or Real Estate Investment Trust. Examples include the American Tower, which is one of the largest real estate investment trusts in the world, as well as American Realty Investors. Lastly, we have utilities on the 11th sector to review. The price to earnings ratio based on last year's GAAP actual is at 23.03, and the price to earning for this year's estimate would be sitting at 32.37. The dividend yield for this sector is currently at 4.17%. Examples of companies here include American Water and NextEra Energy. If you wanted to point out a couple of key observations based on our review, here they are. The sector with the highest average dividend yield was in fact energy, with a dividend yield of 8.14%. The sector with the highest return on equity based on the trailing 12 months is information technology, sitting at 29.71%. Also, the information technology sector has had the best one-year performance, showing a 29.63% return. And lastly, the largest sector in market capitalization is again information technology, with $9.18 trillion in market cap. I would love to hear from you. Let me know which one of the stock market sectors is your favorite one, and which sectors are you investing in at this time. Be sure to let me know in the comment section down below. Lastly, I wanted to show you my passive stock market investing portfolio that I have here with Wealthsimple. You can see it's currently sitting at close to 51K, and this has actually consistently grown over the past several months. In fact, if you look at the 3 months performance, you could see, of course, the market was not doing so well during March. Mid-March declines, and the portfolio value went actually drastically down, but since then it has recovered. And of course, partly is because of the continuous approach to investing passively. Almost every day I'm putting some money into this portfolio. It doesn't matter how small or big. The consistency has actually really helped me. So if you look at, for example, the 1 year performance, you can see definitely how this portfolio has grown. And this is a portfolio that started back in 2017, and very modest and humble beginnings, but over the span of about 3 years. In fact, if you look at it, if I'm not mistaken, it's almost about 3-year anniversary of this portfolio, because I started back in early May, mid-May 2017 with my investing, and we're sitting here 3 years later at a much larger value for this account. So definitely something that I'm very excited. I have a number of accounts here in my portfolio that I've discussed previously in other videos, so I'm not going to get into those details here. In case you want to get involved in passive investing through Wealthsimple, I do have an offer for you, so you can check out the link that is provided in the description. But essentially what it does, it allows you to have your first $10,000 invested managed for free for 12 months. So feel free to use the referral link that is provided in the description. Hope you enjoyed this video. If you did, please hit the like button and join Moementum channel. Here on Moementum channel, we post weekly videos about investing, finances, and personal development. Hope to see you next time.